Good afternoon, ladies and gentlemen. My name is Michalis, and I'm one of the market analysts here at HF Markets. And I'd like to welcome everybody to the first webinar of this week. This week's webinar is going to be slightly different to what we normally look at. Normally on our webinars, we're looking at a presentation. We're looking at something, should we say, slightly more based on theories for educational purposes, ideal for individuals looking to build a nice, strong foundation and understanding of the market. But today, though, we're going to look at something completely different. We're going to look at live analysis. Now, when I look at live analysis webinars and I go onto YouTube and I look at different educators and I look at their live analysis webinars, to be honest, it's not really live analysis. It's very basic. I watch it. I don't really understand. They don't tell me anything about the direction, how the market potentially is likely to move. I have no idea where to put my stop losses, my take profits, and so on and so forth. So it's live analysis, but really they're just talking without actually saying anything. Now, as part of today's webinar, we're going to look at real live analysis. Now, what do I mean by real live analysis? Yes, I understand we're not here all should we say professional traders. We're not institutional traders as in terms of individuals watching today's webinar. So I can't go too much into depth in terms of, for example, looking at volume profiles, cumulative delta statistics, and so on. But what I do definitely want everybody by the end of the webinar is to look at the NASDAQ, which at the moment is one of our most traded assets, and to really understand how to look at the NASDAQ, how to determine where there's signals, and what do we mean by live analysis? To get a good understanding of what the direction of the NASDAQ is, where there's signals, where potentially to look at take profits, where potentially to different scenarios to look at stop losses, look at different methodologies, look at potential signals for scalpers, for swing term traders, for day traders. We're going to look at also different types of signals, such as also scaling in and scaling out. But again, it's live analysis, live on the chart, and to really get an in-depth analysis of how the market is likely to move. Now, a lot of people probably have been reading our analysis for quite a long time, and I'll actually show you. We can actually go through it together. So, for example, if you type in HF, actually, let's just go to HFM, and I can show you directly from the website. There's analysis that we do every single day. So when you look at analysis, you actually see a lot of this is done for you. But what I want to do as part of today's webinar is to give you a way in which you can continuously look at the market and to have a way of saying, okay, this is how the market is going to move in this period of time. I'm placing my risk at this level, I'm placing my take profit at this level, and so on and so forth. But you can see, for example, today we spoke about the NASDAQ, we spoke about a price correction. Last week we spoke about the Dow Jones increasing in value and the NASDAQ decreasing in value. And you can see that's exactly how the market is developing. Now, let's start our live analysis. We're not only going to focus on technical analysis, I'm also going to show you how you can get a good understanding of the line of influence for the NASDAQ and how you can look at certain elements to get a really good idea, even without looking at technical analysis, on what kind of bias there is amongst investors today. Now, here on the chart, we're looking at a very basic price setup. We've been looking at this setup actually for approximately 3 months now. A lot of people have given amazing feedback about this setup. This is such a powerful setup. It's always on a 2-hour time frame. We look at 2 moving averages, which the way they're set up, they're known as price sentiment indicators, because it's indicating whether we have bullish or bearish sentiment and whether buyers or sellers are controlling the market. So here, for example, ladies and gentlemen, we have the 75 bar exponential moving average, and the green here, ladies and gentlemen, is the 100 bar simple moving average. This setup is specifically designed for the 2-hour time frame. And then here at the bottom, we've got the RSI. We don't have 80 and 20 as our default levels. Instead, we have 75, 50, and 25, and we don't have it at the default parameters at 14, but we have it at 18, because again, we're using it to determine whether there's bullish strength or bearish strength within the market. So for example, I can show you just by looking at the RSI alone, ladies and gentlemen. The RSI declined below 50 here, which is below the neutral, into the area where sellers are controlling the market. Since that candlestick, ladies and gentlemen, I mean, the price declined by 2.65%. So we're looking at a very strong decline there. So again, this is just showing you the strength of this setup. I'm going to show you how to use it. We're going to look at fundamentals as well. And by the end of the webinar, we're going to have signals, clear signals for everybody, anybody that can, for anybody to understand, whether you've never traded, whether you're a beginner, have some experience, or even a professional trader. Of course, if individuals have questions, there is a section on the GoToWebinar software where they can ask as many questions as they like. Somebody says has actually messaged on the GoToWebinar system and said the network isn't very clear. On our side, it is clear. So if you have network issues, the best thing is maybe for you to refresh, because on our side, the network I can see, because I've got an indicator here that confirms if our network is good, and the network is good. So maybe on your side, refresh or exit and enter back in. So these, this red line, the 75-bar exponential moving average, and the green line, like I said, they're known as sentiment lines. Now, if the price is above the moving average, so for example, if we're looking at the price between the 5th of June all the way up to this day here, this candlestick here, so all the way from the 5th of June to the 20th of June, so for 15 full days, the price was very clearly above the 75-bar and the 100-bar exponential moving average. The price significantly increased in that period, and I mean significantly increased, and it was increasing consecutively. I mean, we're looking at almost 8%, ladies and gentlemen. So you can see here, you know, this isn't going to show you this setup at the moment. We're going to go into that slowly. It's not going to show you, okay, buy now, now you need to close that trade, sell now, and now you need to close that trade. But what it will do is it will give you a clear bias, because it's a very simple setup. But just by looking at this setup, you can get a success rate based on this year so far, statistics, and it's not, you know, maybe or maybe not, statistically, and statistics don't lie, we're looking at an 80% success rate based on this setup alone. If the price is above these levels, specifically if it's above the 75-bar exponential moving average, which is the red, and simultaneously the price is above the 50 on the RSI. Ideally, we want it to be between the 50 and the 75, so we're not getting an indication of overbought. That is an area where we have clear indications that buyers are controlling the market. So in that area, we're solely looking at where potentially we can enter buys. Now, when the price is below, then we're looking at opportunity for the price to decline, and we're only looking at potential sales. Now, the price has been consecutively below the 75 since the well, we'll look at 3 days ago. I mean, since that, you know, some people may say, well, the price is increasing now. I'll explain that in a moment. But based on that signal, the price has decreased by 1.35%. So again, for short-term traders, and CFDs is of course designed for short-term trading, because there's a lot of benefits to that. Then you can see 1.35% is a lot of price movement that we could have potentially taken advantage of. Now, if the price is below, both on the RSI and the 75 bar exponential moving average, it doesn't mean there won't be volatility, and it doesn't mean the trend will last forever. It definitely won't last forever, especially, for example, with the NASDAQ, where there's a very big hype about it. We've got the AI drive and influence, possibility of decrease in interest rates, which has already more or less taken effect in many regions, but we're waiting for that to take place in America. We'll look at that in a moment as well, because some people, you know, they say to me, I know it influences the market, but I want an indication. I don't want to look in detail and think about, okay, today, what kind of effect is interest rates having? I just want an indicator that says today is positive, today it's negative. So that's what we're going to look at today. I can show you a very clear statistical indicator. But like I said, just because the price is below doesn't mean we've got a sell signal, because we don't at the moment have a sell signal. Why? Because very simply the price is increasing in value. So the buy signals where the price is above is only a buy signal where we're looking at bullish candlesticks. So for example, here we've got bullish candlesticks, here we have bullish candlesticks, here we have bullish candlesticks, and so on and so forth. Below, we're only looking at a sell signal when we're looking at bearish candlesticks. And there's a lot of indicators that I can show you which can confirm to you very clearly why we're getting a correction today. Now, the first target that people, of course, are going to take into consideration is the short-term target. Now, why people are going to take into consideration the short-term target at first? Very simply, ladies and gentlemen, because we're in an area where we're still looking at sell strength. Sellers are still controlling the market at the moment. So in terms of the signal, at the moment, we're only looking at a short-term buy if we're going to take into consideration a buy. Now, this is a very big if. Now, why do I say that, ladies and gentlemen? Number one, because yes, we're looking at upward price movement. Okay, so of course, price action is indicating upward price movement, but we're still below the 50 on the RSI. So we can see 50 here. So for example, if we look at here, ladies and gentlemen, we saw some declines, quite a strong decline. Somebody may have said this is a double top. So that's another indication for it declining. And people may have entered and it would have been a wrong trade. Why would it have been a wrong trade? Because of course it was a weak price movement and very quickly traded in the opposite direction. Whereas if we looked at the RSI, we would have said, you know, yes, I've got a sell trade, sell signal, but we're above the 50 on the RSI, I'm above the 75 bar, I'm above the 100 bar as well. So there's a lot of signals actually giving me conflict. There's conflicting signals. So I'm going to avoid that trade. So if we are going to look at a buy while we're below the 50, while we're below the 75 and the 100 bar moving averages, then of course we look at a short-term trade. Now in terms of short-term trade, we can look at ultra short-term, or we can attempt to look at a slightly larger profit. If we're going to look at the latter, then of course we have to keep into consideration we're looking at a slightly higher risk appetite. So of course we need to keep that in mind in terms of our trading plan. But the first target, ladies and gentlemen, we're looking at the 75, which is this price here. The second target, if we are going to look at a second target, ladies and gentlemen, and if we don't want to trade on such a short term, then of course we can keep into consideration the 100 bar moving average. Now somebody says here, is there still a possibility for the price to decline? Yes, of course, there's still a possibility. And again, like I mentioned, we're below the 75, we're below the 100, we're below the 50 on the RSI as well. So there are signals there. But let's get a better understanding now before we continue and look at what prices to potentially enter and so on and so forth. Let's get a good understanding of what indicators there is out there which can help us, you know, to determine, you know, are we just in a retracement at the moment? We're going to go to that moving average, which is fine. That's enough price movement for us to make a trade. But you know, is that the scenario where it's just going to move up to there and then the decline will continue thereafter? In which case, you know, I need to be careful because I want to only be concentrating on a short-term trade, or is it actually going to move above and we're going to be looking at another upward bullish correction? So that's something we need to take into consideration. So what can I look at as a start, ladies and gentlemen, to get an indication in regards to that. Now, the first thing I can get an indication on is when we're looking at the NASDAQ, you have to keep in mind the NASDAQ, yes, is made up of 100 stocks. Probably everybody here already knows is made up of 100 stocks. But what some people don't know is certain stocks are more influential than other stocks, which is why here, if we're looking at the NASDAQ components, you'll see they're ranked 1, 2nd, 3rd, 4th, 5th, so on and so forth, because it's showing what level of influence they have. In the financial trading market, we know this as index weight. And the weights actually you can see here. So from the 100 stocks and from the NASDAQ index, more than 8.5% is made up of Microsoft. More than 8% is made up of Apple. More than 8% made up of NVIDIA, Broadcom 5%, and so on and so forth. Now, there's different theories that people can take into consideration. The most well-known theory is to look at all stocks above the exposure of 1%, and they'll deem that as the most influential stocks. So, for example, it will be, you can see here, all stocks above 1% is from 25 and above. So the top 25 most influential stocks. Now, somebody may say, you know, how's that going to help me? How's that going to help my trading? And I'll tell you why. Because we're looking at an upward price movement on the MT5, but we're below the RSI, we're below the 75 bar, and we're below the 100 bar SMA as well. So we want confirmation, and we want further elements to indicate that actually there is some strength in the price movement. So what can we take into consideration? Something which is definitely great is if I look at the top 10 most influential stocks here, only one is declining, and it is a very small decline. To be honest, nothing to brag about, in all honesty, but nonetheless, it is a decline. So from the top 10 most influential stocks, 90% is increasing in value. 90% is increasing in value. So that's a very big phenomenon. And also keep into consideration that just by looking at those top 10 stocks, we're looking at more than 30% of the NASDAQ. 10 stocks, about 30% of the NASDAQ. It's actually, I think, if I remember correctly, more than 35. But anyway, we're looking at the top 25 for the moment. From the top 25, ladies and gentlemen, we have a decline here. So 1, 2, 3, 4, 5. So we've got 5 stocks which are declining from 25. So we have 80% of the NASDAQ's most influential stocks increasing the value. Okay, so you can see exactly how this is helping us. If the NASDAQ was increasing in value, but this was at, for example, 50%, and there's a lot of occasions when that happens, or maybe it's at 55, maybe it's at 60, maybe it's at 65. You know, I'm going to be sitting there and I'm going to be saying to myself, yes, the price is increasing in value, fair enough. Maybe because it's the top 3 or top 4, top 5 stocks which is driving that, but the rest of the NASDAQ is actually doing poorly. You know, I'm below the moving averages, I'm below the neutral on the RSI, and only 60% are increasing in value. So, you know, I'm uncomfortable trading upwards, and you avoid that bad trend. Whereas here, I can see 80% of the top 10 are increasing in value, 90% of the top 10 are increasing in value, and 90% of the top 25 and most influential stocks are increasing in value. So that gives me more confidence, ladies and gentlemen. The other thing for us to take into consideration, ladies and gentlemen, if you go to Finviz, there's a couple of things for us to take into consideration. 2 things I'll actually make a note of. The first thing I want to make a note of, ladies and gentlemen, is the day's performance, the week's performance, and also the month's performance, and so on and so forth. This is something for us to take into consideration. This will split up the stocks into sectors. What I want to see is that this technology sector is performing well. Yes, the NASDAQ isn't 100% only based on technology, but nonetheless, the exposure is to growth stocks and the technology sector. And I can see today, ladies and gentlemen, even though the technology sector this week was poor, I can see it's the best performing today. So I can definitely see, ladies and gentlemen, that investors are entering at that lower price, because a lot of traders, they say to themselves, okay, if the price is declining, then the trend is downwards. As the price declines, if people in the longer term think the price will increase, not just because the price is declining, beginner traders, they get into the bad habit of, if it declines, let's buy, if it increases, let's sell. But there's not any other reason other than that for them to do so. But investors, if they do believe it's a longer term upward trend, and the price declines and retraces, they just see it as an opportunity to enter at a better price. So, here we can see very clearly, yes, it's poor this week, over the past week, but today's the best performing. So that's another indication. So we've got another indication there, ladies and gentlemen, of potential upward price movements. Now I'm going to go to the day's performance. Now, the day's performance, I want to look at two things. Number one, I want to look at the VIX here. Now, what is the VIX? The VIX is a sentiment. It's known as a sentiment indicator. If the VIX is higher, an increase in the value, it indicates that there's a lower sentiment within the market and a lower risk appetite. So that's not a good thing. In addition to that, what I want to look at is, I want to look at the performance of the global stock market. Now, in terms of the global stock market, to be honest, I've already looked at this today, ladies and gentlemen, and it's mixed. Okay, why is it mixed? Because Asian stocks are doing very well. Look at the Nikkei 225 here. It's increasing more than 1%, so that's amazing. But if we look at, and also, by the way, yes, of course, US stocks are doing well. The NASDAQ 70% upwards already. If we're looking at the S&P 500, it's increasing in value. The only one which is performing poorly is the Dow Jones, which is less correlated in terms of positive correlations nowadays. But if we're looking at European stocks, the FTSE 100 is down, the DAX is down, we can see here. So look at the DAX down more than 1%. We're looking at the Euro Stoxx 50, the French CAC, all of these are declining. So this is 50-50, okay? Because we always look at the global stock market. If the global stock market is doing well, then again, I'm 100% confident that if I get a signal, then I can take advantage of it potentially. But at the moment it's 50-50. And another thing is the VIX was up 0.32%. A positive though is we can see it significantly declined. So it moved down a space. It's now only 0.02% upwards. So that's nothing to brag about. So that's suddenly turned into a positive. So you can see how I'm using this, ladies and gentlemen, to get an understanding of how is the price of the NASDAQ going to move. Yes, after this, I will go to the MT5 and I'll look at exactly where I'm going to enter, where I'll exit. If I'm looking at swing trading or day trading or scalping, we're going to look at these potential entry points. But I need to get a good bias and a good understanding of what kind of sentiment there is today. This is why I've looked at the VIX. I can see the VIX is declining. Okay, so that's really helping me there, ladies and gentlemen. I want to look at how are other US indices performing. Which sector today is the best performing index, best performing sector? I want it, of course, to be growth stocks. I want it to be the technology market because I'm trading the NASDAQ. And if, I can see the price is moving upwards, I can see it's trying to correct, but I want to see it in the rest of the technology market. I want to see it in the rest of the stock market and the global stock market. I want to see that components of the NASDAQ are doing well. We saw that 90% were upwards. We saw that 80% of the most influential were also increasing in value. So this, of course, is giving me an idea of how the market, what kind of market we're looking at today. The only concern, like I said, is EU stocks have taken a massive hit. That's the main concern, ladies and gentlemen. The thing that I, of course, will keep looking at today is, of course, the technology sector here. And also keep in mind, the NASDAQ is also partially connected to communication services. And another thing to take into consideration, and this is, as you look at this every single day, like I do every single day for 10 years now, as you look at this, you start to see the correlation. So I saw, this week, the best performing markets was the energy market, not as in commodities. Yes, commodities performed well, but within the stock market. And I could very clearly see that there were mitigating risk away from the technology sector to the energy sector. Now I can see they're reversing that, which is something that, of course, does take place. And if the energy market was increasing and the technology market was increasing, that would give me some concern, because I could see before that these institutions mitigated away from the technology to the energy. And then if both are increasing in value, then I'll think again, because I'll say, they're not mitigating back to the technology market. So is this going to be a weak price movement? In which case, if I'm going to trade, it will be ultra short term, and then potentially out of the market. These are how professional traders look at the market. And to be honest, if you look at this every single day, you will start to see that connection. When I always say to people within the financial trading market, these big players, and hedge funds, fund managers, institutional traders, institutions, they drive the market. So we need to look at where and how they are placing their portfolios and where they are driving the market, because we won't drive the market. Even if you're a professional trader like myself and you're trading with a very decent account size, you won't be able to drive the market, because these institutions will drive the markets. Their algorithms will be a lot faster than you are, and so on and so forth. Somebody said again, he mentioned that I said you can get an indication in regards to interest rates. Yes, you can get an indication in regards to interest rates. So I'm going to type in the Fed Watch tool. I'll use the Chicago Exchange Fed Watch tool, and I can show you exactly how you can use this as an indication, ladies and gentlemen. This basically, ladies and gentlemen, will show you what the possibility of when interest rate cuts will take place. Of course, at the moment, we're only taking into consideration two outcomes: an interest rate cut and a pause. The only thing we can potentially also look at the possibility of is how many there's going to be in 2024. At the moment, the main thing is, when are we going to get that first cut? At the moment, the main possibility actually is November, even though most people are talking about September. Based on the indicator, it's November. Sorry, apologies, September. Now, here, ladies and gentlemen, we can see the possibility of an interest rate cut in September is 59.5, and the possibility of a pause is 34. Okay, now if this increases, that's positive for the stock market. If that decreases, it's known to be negative for the stock market. If a pause becomes a higher outcome and a possibility, then traditionally, again, that will negatively pressure the stock market. If that declines, that's ideal for the stock market, so potentially can support it. And again, this is something we look at throughout the whole of the session. This will change. Sometimes there's a lot of volatility, sometimes there's not. To be honest, today and yesterday, it was only a range of between 59 and 62 this here. So there wasn't much volatility, but as that changes, again, you can use that as an indicator, because that definitely will affect the financial trading market, of course. Now let's go actually to the stock market, the NASDAQ, and let's start looking at potential entry points. And then we'll go back to the fundamental elements. But you can see exactly how I'm using that to say to myself, it's an upward price movement, but shall I take it into consideration? Because I'm below the sentiment lines, I'm below the neutral on the RSI. And you can see that by looking at those factors, other than the European stock market, we can see that there is elements there which can point towards a potential further correction upwards. Like I said, at the moment, the technical analysis is pointing to a target at this level here, which is very simply at 19,712.13 cents. So this is the first target that we can take into consideration. Now, somebody may say, you know, do I enter into that straight away? And we're going to switch on to another time frame to get a better understanding in regards to that. So we're going to look at actually a 5-minute time frame. This is a 15-minute time frame. Let's switch over to a 5-minute time frame. And somebody may say, okay, we're looking at upward price movement. A couple of things for us to note. We're definitely on the RSI above the 50. We can add the 50 here as well. That can be helpful, like this. So let's add the 50 to the RSI. We can see we're definitely above the 50. We can see we so far have convergence. We don't have divergence yet. We've got a downward crossover on the stochastic oscillator, but the stochastic oscillator is high. And the only reason why we're getting that is because we saw this downward price movement. So when are we going to get a signal? Okay, that's the first thing people want to see. People can look at, because there's not been much of a retracement, you can look at the breakout. Now, what exactly is, so as soon as it breaks out above this level here, then you can use that as a signal to potentially look at a buy, if that's how you think the market's going to move, with a target at this level here, ladies and gentlemen. Now, we're not just very simply looking at the fact that we're above the 100 bar simple moving average here, so that's an indication for potential upward price movement. The latest crossover is an upward crossover as well. We're very high on the RSI, so we've got quite a lot of signals there for upward price movement. Also, the stochastic oscillator has just crossed upwards. So all of that on the 5-minute will indicate upward price movement. And the 2-hour here indicates to targeting this level here, at least at first. You know, some people may say, for example, yesterday, we were actually looking at the Euro USD. I'll put the Euro USD for a moment. And we looked at the same scenario. We said signals indicating that it would either trade to the 75 here or the 100 here. And some people said to me, you know, what if the price keeps increasing upwards? Actually, the signal here was perfect, because you can see it's definitely declining now. And also, we can see that it moved right to that level, slightly higher, but then it just very quickly collapsed. So anybody who was trying to be greedy and make more would have definitely be very unhappy now. So you can see here, those sentiment lines worked perfectly. And you can also see here, ladies and gentlemen, that they work perfectly as well. So the same thing applies to, you know, the NASDAQ. You know, don't be greedy. At first, this is the signal. Of course, after that, it may change. We may get further signals. That's absolutely fine. That's not an issue at all. For example, you know, if I go back, just to give you an example, you know, from when we were down here, and then we wanted to start, let's say, trading the correction upwards, at first we would have aimed at this range here. Actually, that range would have done very well for us, because as soon as going into that range, it actually started to move slightly up and down for about 24, 48 hours. But of course, as it broke above it, you know, it's not, that's the target, that's the only trade we're going to look at. We're going to reanalyze and keep analyzing, and there will be more targets. So far, ladies and gentlemen, of course, that's the target that we're looking at. We're looking at a crossover that ideally we want to see. We've just seen just now it's broken above. It's dipped back below at the moment. So of course, we wanted to, if nobody's traded just yet, we want to break back above as well. Now, the only reason we're looking at the breakout point, normally I say to people, you know, the breakout point actually has disadvantages. Okay, and the disadvantage, ladies and gentlemen, is you're missing a lot of the price movement. You know, some people can say, you know, if I traded here, I probably would have hit my take profit already. If I'm short term, that is, because it's only a 5-minute time frame. I'll give you an example of that as well, actually, to assist. So for example, if I'm looking at this upward price movement, and I was looking at the breakout, the breakout's here. Okay, so the whole price movement is if we look at up to here, should we say, is 0.57%. Definitely too much for ultra short-term traders, but maybe people are looking at scaling in and scaling out, or maybe we've got slightly longer term traders here. So it's almost 0.60%. The breakout, if you're trading the breakout, you are actually missing more than half of that, ladies and gentlemen. You're actually missing 0.40%. That's more than half. So what we do a lot of the time, and the benefit, rather than looking at the breakout level, is that we can go to the Fibonacci, and I'm going to change the level because normally we look at 65 actually. So let's go to our, so there we go. So here we're going to look at 0.65, like so. Same thing here, 65.00. There we go. And that will slightly change it, slightly bring it slightly higher up. And again, you can amend that. That's just the traditional level, which is known as 65. What is that saying? That's basically saying, you know, I believe it's an upward trend. Before we've even come to this, you know, level, maybe we're on a 2-hour time frame, but we're just saying, I already know it's an upward trend, but I'm looking at where to enter. And this much momentum is enough for me to enter, to speculate, rather than wait for the breakout. Because, you know, if we wait for the breakout, there's 0.80% that we could have traded. Whereas if you're looking at the 0.65, ladies and gentlemen, there's actually 0.32% that we could have traded. So you can see the benefit there. Now, we're not going to do that at the moment. Why? Because this isn't really a retracement. It's just a very quick pullback. It's not really a retracement, ladies and gentlemen. It's not really enough there for me to put a Fibonacci level. So if I draw the Fibonacci level here, you know, there's going to be maybe 5 pips between the breakout and the 65 entry level. So there isn't much of a point, ladies and gentlemen. So this is something for traders to take into consideration based on the short term. So this is an entry that people can take into consideration. Remember what I said, the target is very close. We want to keep it very close because technical analysis still is indicating that sellers potentially can regain control of the market. And like I said, what we're going to do, of course, is keep monitoring these. So for example, we're going to keep refreshing here, and we can see again, nothing could really change. It actually slightly got better because Microsoft, the most influential, is increasing in value now, whereas before that was actually decreasing. If we look at the top 10, again, there's only one stock which is decreasing in value. Nvidia is the best performing. The second best performing is Tesla, ladies and gentlemen. Both are increasing upwards. Actually, the one with the least volatility is the one which is decreasing in value. This area is of slight concern. We're going to keep an eye on that. But again, to be honest, these are very small declines. But it's definitely something we're going to keep an eye on. Of course, we're going to keep an eye on this as well. Definitely want to keep an eye on that. So technology is actually the second. Thank God it's communication, which is actually the best performing at the moment. So people actually may say, you know, let's slightly look at maybe the Dow Jones or S&P 500, which is exposed to all three of these: healthcare, technology, and communication. But we can see energy is still a decline. So there's a benefit there as well, ladies and gentlemen, of course. So we're going to keep an eye on this. Of course, we're going to keep an eye on this as well. This is something we're going to again and again keep an eye on as we are trading. So let's switch to September. At the moment, it hasn't changed. So this is something we're going to keep an eye on. Now, let's take into consideration now, if we look into scale in. Now, what do I mean by scaling in? A lot of individuals will actually, you know, say to themselves, I want to open one trade. Okay, I'm going to open one trade and I'm going to open one lot. So whenever we're entering into the markets, okay, we always say that, this is what I'm willing to risk and this is what I'm willing to lose. So for example, let's actually go to 15 minutes time frame, just for the sake of this practice here. For example, we may say, I'm entering at this red line. This is my take profit, and this is my stop loss. Let's put the take profit slightly. Actually, just keep it there. So before entering, I know that's where I'm going to enter the market. So my take profit may be, I'm looking at a profit of 30%. Sorry, it's $30, should we say? And my stop loss, ladies and gentlemen, let's say it's at $40. So I've actually got a negative reward to risk ratio. My reward to risk ratio is actually, I'm looking to earn $1 for every $1.25 that I'm looking to risk. So ladies and gentlemen, this is what is known as a negative reward to risk ratio. Now, sometimes that isn't bad as long as we have a very, very high success rate. So 85%, 80%, 90%. Otherwise, that can be very disadvantageous. So when looking at that, I may say, I'm going to put my take profit slightly further away, so that way at least I have at very minimum a 1-to-1 reward to risk ratio. So it's not a negative reward to risk ratio. Now, instead of looking at a scenario like this where I open one trade, this is my stop loss, this is my take profit, you can look to scale in. So rather than opening, should we say, one lot here, I'm going to open 1.25. Okay, and that's where my stop loss and take profit is going to be. Let's go to 1 hour. Then I may say to myself, at this level here, so I'm waiting for some more momentum, I'll open another 0.25 and I'll put my exit for that second trade here. And I'll put the stop loss for that second trade here. And I keep doing that. So I've split my one lot into 4 0.25 lots with different entries at different prices at different times, with different take profits and different stop losses. So what I'm doing is I'm mitigating the risk of poor timing and poor direction as well. Now, if the market moves against me, there's no difference, okay? Actually, it's probably, I'm just going to be looking at a lower loss because for all of them to have entered, the price must have moved up and some of those stop losses will be higher up as well. So if the market moves against me, it's better that I'm scaling in. Number one, because if it moves against me straight away, I opened only 0.25 instead of one lot. And if it moves upwards, I would have hit some of my take profits and exited some of those trades. And then when it moves against me, my stop loss is higher. So probably I would have been actually at a lower loss or at a break even. So you can see the benefit here. So this is another scenario you can take into consideration, of course. This is known as scaling in and scaling out. We actually had some webinars where we looked solely at scaling in and scaling out. So how can people look at this, look at scaling in and scaling out? What options do they have? Now, in terms of the entry, ladies and gentlemen, you can definitely look at a 1 minute time frame. Actually, let's go to a 1 minute time frame on this setup. Might be easier for people to follow. Now, how can I scale in and scale out? Now, I know that I want to trade upwards, up to that target. Now, when I'm scaling and scaling out, of course, I'm looking at multiple targets, but let's look at the entries. Now, I'm on a 1 minute time frame. So as I'm scaling and scaling out, I'm on that 1 minute time frame looking at all the bullish crossovers. So I've got a bullish crossover here, ladies and gentlemen, and I've got a bullish crossover here, and I've got a bullish crossover here. The price actually has declined over the past 3 minutes. Let's bring the price here, for example. If that crosses back upwards, ladies and gentlemen, just as an example, then I'll open a fourth trade there. So you can see as the price has volatility and upwards and downward price movement, I'm using the 1 minute time frame to open smaller trades at multiple times, at multiple entries. So we can see I opened at this trade, then I open that here. So this is at a different time, slightly higher price, this is at a different time as well, a much higher price. And if it increases again upwards, in which case it's still looking at higher lows consecutively, which is a positive point, then most likely probably will be higher as well. So you can see it's different prices, different times. And we're looking at different entries, exits, apologies as well. Now, in terms of our targets, what can we take into consideration? What you actually can do is look at Fibonacci levels. So for example, look at the impulse wave like I've just drawn there, and draw the Fibonacci based on the impulse wave. And you can use, for example, the 0.61.8. The only thing I will say is, you know, if we're trading, let's say, a buy at that price there, for example, and that's where my take profit is, and the take profit is quite close. Actually, no, it's not that close, 0.16%. That's quite typical for scalpers and actually for short-term traders, maybe slightly large for scalpers, but 0.16%. So if that's where my take profit is, again, what type of reward to risk ratio am I looking at? Do I want, for example, a 3-to-1 reward to risk ratio? In which case, if I want a 3-to-1 reward to risk ratio, if I'm trying to earn 0.16%, my stop loss needs to be closer. So that's should we say 6, because it's above 5, for example. So my stop loss needs to be only 6 lower. So my stop loss actually needs to be there, so slightly higher than our moving average. So my stop loss will actually be here, so not much volatility, but it's just an example. That's on a 3-to-1 ratio. So my stop loss is there, and my take profit is here. Okay, if you've got a higher reward to risk ratio, by the way, ladies and gentlemen, you don't need such a high success rate. So for those individuals that are struggling with the direction, you know, so I've got a lot of individuals that say, I struggle determining how the market is going to move. The best scenario until your success rate increases is to increase your reward to risk ratio. So, you know, if you're trading on a reward to risk ratio of 1-to-1, so for every $1 I'm placing my take profit, my stop loss is at $1. So if I'm looking to earn 30, I'm looking to risk 30. So that's where my stop loss is. That's a 1-to-1 reward to risk ratio. To be honest, beginner traders, most of the time, they don't have a reward to risk ratio, which is a big mistake. And a lot of the time, they have a negative reward to risk ratio because they'll close profits very early and they just let losing trades run, which of course, obviously, there's risks to that. So if you're struggling with direction, instead of having a reward to risk ratio of 1-to-1 or a negative reward to risk ratio, which would only make sense if you have a very high success rate, which you won't as a beginner, is very simply have a higher reward to risk ratio. So for example, trading with a reward to risk ratio of minimum 2-to-1, 3-to-1, 4-to-1, and so on and so forth. You know, 5-to-1 if you think that's appropriate, and so on. So that's a scenario that you can take into consideration. Because yes, you know, maybe 60% of the time your trades are wrong, but because that 40%, the profit is so high, then at the end of the week, your profits and loss is in a positive. And you know, we need to think about trading as a business rather than every single trade making a profit. You know, it's a business. Every business has its revenue, so money coming in, and expenses. You know, the expenses can be the building, it can be employees' salaries, it could be raw material, whatever it may be. The same thing applies. You will have losing trades. They are an expense. As long as your revenue is higher than your expenses, then you're in a profit and you're a successful trader. You know, that's the right mindset of a trader. Doesn't mean you shouldn't care about losing trades. It means you should accept them based on the mathematics of your trading plan. As long as the mathematics of your trading plan, so your success rate and your reward to risk ratio is in line with reality, then of course you're a responsible trader. Now we've kind of lost volatility Our entry point, main entry point, still at the same level here, ladies and gentlemen. We've not really got any downward price movement, so people that did enter, I don't think they would care so much at the moment, not much volatility. But those that want to enter a second trade or haven't entered yet, that's the potential entry point. We've still got a target here, ladies and gentlemen, at this exponential moving average. Now, at what point will we get an indication of a change of direction? So that's a good and important point as well. Let's go to a 5-minute time frame like this, where we're going to get an indication of a change of direction. If we decline below this level here, which is our main support level, that's an indication of a change of direction. If we get a lower low, it's an indication of a change of direction. So for example, this is the low. This is the next low, so we've got a higher low. If we get a lower low, then you can, for example, use the breakout of that low, or we can use the Fibonacci retracements to enter at the 65 level. So that's an option as well. So we can see here, that's where we're going to get a change of direction signal. If we are going to get a change of direction signal, then at first we can target this level here, ladies and gentlemen, which is a very key level. Now, some people may want to put this take profit slightly higher than that. Why? Because here we can see it's definitely an area where psychologically traders are entering the market. So do we want to trade too close to that? It's something for us to take into consideration, because if we're very close to that psychological level, there's potential dangers there, because if traders enter slightly higher, we'll miss that take profit. So rather than place it further away, we can place it just above that psychological level within the market. So that's something for us to take into consideration if we look at a change of trend. If we get an indication of a change of trend, it will be also in line with these indications that we are seeing. Now, for those individuals that want to know when we're going to get an indication of a stronger upward price movement, very simply, if we're going to move above the 75 bar moving average, and we want to move strongly above it and clearly above it. For example, here, yes, it moved downwards, but it just kind of hovered around the 75 moving average. We don't want to see that. We want it to clearly cross above. If it clearly crosses above, that's an area where we could potentially enter. Now let's go to the 5-minute again, because we can see now we actually have a retracement. So we can, again, at the moment we still got higher highs. It's just retraced to that support, that resistance flip to a support level. The only thing we can do other than this breakout level is draw the Fibonacci if we wish, and bring out the buy signal slightly lower here. Okay, but we definitely need more momentum to get a buy signal, ladies and gentlemen. Why? Because we're in a red candlestick at the moment, and we want to see upward momentum being renewed. So, ladies and gentlemen, before we end today's session, feel free to ask any questions as well. Let's release some polls to see what everybody's view is within regards to the market. So how will the NASDAQ end the day? Let's see what people think, ladies and gentlemen. How will the NASDAQ end the day? A few more seconds, ladies and gentlemen. Only 60% have voted. It's very interesting, actually. Very, very interesting. I didn't expect this. So we're currently at 67% have voted. Let's get at least one more vote. We've got 78%. One more vote, ladies and gentlemen, and then I'll release the answers. I'll release what everybody has to say. This is actually very interesting. I want one more vote though, ladies and gentlemen. There we go. So 84% answered. 53% only believe the price will increase. So it's more or less 50-50. 53% say it will increase by the end of the day. 47% say it will decrease by the end of the day. So a slight bias towards buyers and upward price movement. Let's release another poll. This one's going to be slightly different. How will the NASDAQ end the week? So by close of trading on Friday, how will the NASDAQ end the week? Higher or lower? I will only give people 1 minute to answer this, ladies and gentlemen. And by the way, if people have questions, you're more than welcome to ask questions, and I will answer them live now as well. 60% have answered. Come on, guys, let's see if we can get some more voters. 75% have answered. Okay, this is more clearer of an outcome. Only 10 more seconds and then I'll end the poll. We've got some people that haven't answered yet. If you can answer, ladies and gentlemen. And I've got a question, I'll answer it in a moment. Okay, so 76% have answered. Let's end the poll. 69% believe the NASDAQ will end the week higher than the current price. 31% believe the NASDAQ will end the week lower than the current price. So very clearly the majority believe it will end the week higher, whereas today it's 50-50. More or less, with a slight bias towards buyers. Now, somebody asked the question, does the US dollar fundamentals affect the NASDAQ? Yes, of course it does. Definitely affects the NASDAQ, ladies and gentlemen, for different reasons. If the US dollar becomes too expensive, it can actually have a negative effect on the NASDAQ because it sways away, and this promotes, should we say, the stocks, US stocks like the NASDAQ, very simply because it's not, should we say, competitive, the exchange rate for people to buy US stocks. Basically, the NASDAQ becomes more expensive for them to buy. And also, they don't want to risk the the US dollar declining after such strong increase, in which case, even if the stocks do increase, they may lose because of the US dollar. So that's a possibility as well. So if it gets too expensive, it can have a negative effect. At the same time, if it declines, it actually can have a positive effect because they deem US stocks as lower risk because they say to themselves, you know, even if the stocks don't do well, if the US dollar does do well, we still profit when we sell and exchange back into our currency. So that has an effect directly on the NASDAQ, but also is correlated because of the monetary policy. The higher possibility of no interest rate cuts or delayed interest rate cuts will pressure the NASDAQ, whereas the opposite will support the NASDAQ. So hopefully that assists as well. If we have any other questions, ladies and gentlemen, please feel free to ask. Otherwise, we'll end today's session. So I can't see any other questions. Trade safe, ladies and gentlemen, trade responsibly, be responsible traders. Hopefully you found today's webinar educational. In the meantime, we will have a webinar tomorrow and we will have a live stream webinar on social media and YouTube on Friday. And if you do need any assistance, of course, feel free to get into contact with us and send us an email. In the meantime, though, trade safe, trade responsibly, enjoy the rest of your day, and we'll speak again on our next webinar. Goodbye.